behalf of Biz Talk Today TV and CrossCheck Media, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host from spectacular Scottsdale, Arizona, Tobin Smith. Toby, we have the guest of all guests. You have been talking nonstop for years about shipping and these tankers and that liquefied natural gas, and you've been going on and on and on about it. And the audience has been writing in saying, "Tell us more." But we have the expert that's going to tell everybody more, because we had to go directly to these companies and we had to bring over the CEO to tell you all about it. So with us today, we have Stamatis Tsantanis. He is the chairman and CEO of Seanergy Maritime and United Maritime as well. Both are publicly traded companies and they trade on the Nasdaq. Welcome to the show.
Thank you. It's great to be here. Thank you for having me. It's a great pleasure, great honor.
Todd, he was at the US Open last night, and he's still probably excited after that freaking match in the semifinals. Oh my gosh.
Yes, very much. And there is so much to talk about too with that. But you mentioned the US Open. You're in Manhattan. You are based in Athens, Greece. Why are you in New York today?
Well, first of all, we operate two public shipping companies, so we have a lot of people to visit. And we tend to time our visit to New York with these nice events that we can attend, this US Open and everything else. So, and we love this country and we love this city. It's beautiful to be here. Most importantly, we are listed on the Nasdaq, so we have a lot of bankers, we have a lot of lawyers, we have a lot of investors, and we have pledged to be in front of the people that we like to work with as often as we can. So I'm like a traveling CEO. I go around the world all the time. In a couple of weeks, I will be in Singapore. In 4 weeks, I will be in Japan, Tokyo. So I like travel and I like to be in front of the people that we do business with.
You know what, Todd, by the way, in following shipping for a million years, he is highly unusual. The normal CEO, inherited the company from his dad, and English not so good, and so this is why he's so unique, that he actually gets out. Hey, let's start at the beginning here.
Yes.
You are a bulk shipper, which
yes.
does not mean you're shipping bulk. It means you're shipping very important minerals, very important, the bauxites to make steel, et cetera, Give our viewers, sort of the quick 30 foot or 3,000 foot level on what you do, why it's important, and most importantly, how you're growing your company. And, your stock's up 32% this year, which, is certainly not bad. Little better than my SMC stock, SCI stock that we sold at $1,100 in January with like, I don't know, 8,000% gain. It's now less than $300. So you know what?
Oh.
Whatever that is for SMCI, bulkers are like this. Okay,
yes.
They run. Sometimes the rates go down, sometimes the rates go up. But just give us the overview. Pretend that we're never invested in shipping stocks or bulk shipping.
Thank you. Well, first of all, Seanergy Maritime, and our ticker is SHIP, SHIP. Owns and operates a pure play fleet of Cape-size vessels.
All right, what's Cape-size mean? What is Cape-size?
It's the largest conventional size of dry bulk. I mean, our ships are on average 1,000 feet long. So they're like very, very big ships. And
have you ever seen these, Todd, in the Baltimore, since you're from Baltimore?
I have, yeah, and we'll talk about that with Baltimore and obviously the Key Bridge, but I think it's like 2 football fields, right?
Three football fields.
Three. Wow. Huge.
3 football fields. And I'm referring to soccer football fields. So
it's
almost 3. Yeah. So they're big ships. And the average, size of transportation that we use is 180,000 tons. That's a huge amount of raw materials that we transport from place A to place B. So what we do is that we do a lot of iron ore. Iron ore is required for the production of steel, coal, which is also required for the production of steel, as well as, energy associated with that, bauxite, which is used for the production of aluminum. So no matter what kind of infrastructure project you have, whether that's a road or a bridge or a railroad or a big building or what have you, or an airport or various other infrastructure projects, you need steel. And we believe that we are very, very important in the production of steel around the world. So that's what we do. That's in very simple terms.
Yeah.
You know, we transport the raw materials that are required for the production of steel. That's
But
what
when you're picking up and then delivering, who owns the material? Is it the steel company already? Is it the producer? How does it work?
It's usually big conglomerates. You know, the exporters are the likes of Rio Tinto, BHP Billiton, you know, the big producers, Vale out of Brazil. So they're conglomerates and they're producing about half of the global iron ore production. I mean, these three companies alone, they do about 1 billion tons a year. We have other very big charters. So one of them is Cargill, which is a US-based company. Other companies like Trafigura that are big in commodity traders. So we do business with what we believe to be the Champions League of the global charter.
The Champions League, another soccer thing, Todd.
I'm sorry for the reference. You know,
football.
The World League of charters.
Football is NFL's just about ready to start.
Well,
but your clients are not the steel companies. I'm trying to get it. Your clients are the the mining companies or the trading companies. So you're getting paid no matter what. But you're getting, tell us how. I love how the rates, go up and down and up and down. Where are we in the rate cycle right now?
Yes, we are in a good. And it's all about supply. I mean, demand for raw materials is always positive. I mean, you have never seen a period where demand is, negative. So demand for raw materials is always positive. It's all a matter of supply. So the more ships you build, the more overcapacity you create, and
lower the rates.
Yes,
right.
We are fortunate to be the Capesize segment has the lowest order book of the last 25 years. So right now we operate in what we believe to be the segment that has the best fundamentals for the next few years, because the order book is basically zero. And we haven't seen such a low order book as a percentage of the existing fleet for like 25 years. And it's impossible. I mean, if someone went really crazy and wanted to build like 100 ships, right now, the shipyards are operating at full capacity because they've been building other types of ships, like containers, like tankers, like these other types of ships that, have had some very good years the previous years, and they've now filled up all the spaces for building vessels.
I think the audience needs to understand that there's only three places where these ships can be built. One is Korea, one is Shanghai, and one is in Japan. When the natural gas embargo hit Europe, obviously LNG shipping all of a sudden became, an existential crisis.
Correct.
LNG companies ordered something like 75 new super large LNG. It takes 2.5 years to build these ships, and if you wanted to build 100 more, of your bulkers, you couldn't do it. You mean literally, there's X amount of space. I've been to the ones in Shanghai. There's X amount of space. They're all filled with these like caverns of boats being built from the bottom up. It's incredible to see.
So Stamatis, how many ships are in your fleet?
We have 20 Capesize vessels. So the cargo carrying capacity of the company is close to 4 million deadweight tons. So we are quite big in respect of cargo transportation capacity. So 4 million deadweight tons is quite big. It's not the biggest, but we are one of the very few shipping companies, I think one of the two shipping companies listed in the US capital markets that has a pure play fleet of Capesize vessels.
Right.
All the other companies carry smaller ships as well. They have like Supramaxes, Ultramaxes, Panamaxes, that they don't have the same supply fundamentals like we do. But, investing in Seanergy right now, you're investing in the company that has the best fundamentals in respect of the sector supply of tonnage. And
Todd, I like a guy with confidence, okay? I like a guy with confidence.
Yes.
Let's talk Panama Canal for a second.
Yes.
That really changed the game. I mean, I saw the backup. You get these satellite photos and you see the backup of ships, bulk shippers particularly. That obviously had to have essentially taken boats out, because now they have to go another 11,000 miles, and so you can't rent a shipper when it's full of coal, and there's no more boats. prices go up. So where are we on the Panama Canal thing? Oh, and by the way, it's because they don't have enough rain down there because there's this thing called global warming and the El Nino.
Oh my goodness.
El Nino and La Nina, Todd, don't shake your head.
There we go.
You're such a right-wing dude.
You have to throw in the climate change.
Yeah, because we know there's no climate change, Todd. You're right. You're
no climate change.
Yeah.
Well, unfortunately, and I really mean it, unfortunately, whenever there's any disruption happening globally, whether there is a war or a closure or anything associated with disruptions of trade lanes, it's bad for the consumers, but very good for shipping.
Yeah.
Because you need more ships to create the extra ton miles required to transport the same quantities longer distances. And that's very unfortunate. I mean, I really mean it, that because at the end of the day, it's the consumer that pays the price. Because the incremental transportation cost, when you need more ships to do the same, capacity, it's unfortunate. Yeah. So it's not only Panama Canal, but it's also the Red Sea that has been a result of the Palestinian issue. So, and of course, the invasion of Russia into Ukraine, that has been fundamental things that have affected shipping in a positive way. So the invasion, I'm just going to change subject a little bit. The invasion of Russia into Ukraine created this anomaly that, drove freight rates of tanker ships into the highest level of the last 30 years or more. The tanker owners, people that own tanker ships, went into this amazing cash flows because the war created this anomaly where Russia was transporting the oil directly through pipelines into Europe. And now you have to do all this engineering in order to facilitate the European energy needs. I'm not saying anything, in lack of a better word, I'm going to use engineering. Yeah. Same thing is about the dry materials. I mean, the Red Sea and the Panama Canal closures have been fundamental in driving the rates upwards, because now you have to do, like you very well said, longer distances. Longer distances means more expensive freight rates, and that ends up to be more expensive for the consumer. I'm sorry to say, but for the business, it's very good because we get more money. So
where do you sit with China right now? I mean, China is slowing. The construction craziness. I remember the first time being there. You go into a city where there's no city, but there's 25, 60-story apartments that nobody lives in. That needed a lot of steel. That needed a hell of a lot of steel. Now they're tearing them down. So how do you look at the economics of where you are transporting, where you're transporting to? Is it like they like to say, a hard market, meaning that prices are up, or is it a soft market that your shipping costs are down?
It is still a great market. China is fundamental for the production of the global steel demand. Mm-hmm. China produces 56% of the global steel production. It's a massive amount, and that's kind of, you don't see any steel mills in the United States anymore. You don't see any steel mills in Europe. You have like a small capacity, but unfortunately, or fortunately, the world relies on Chinese steel. So no matter what you build in Africa or in the Middle East or in America, it has to come somehow, from a steel mill. You cannot create all these steel needs from, the electric furnaces that make, the recycled steel. You need blast furnace steel, whether you like it or not. And China produces 56% of the global steel production, and that's a massive amount of reliance that the world has on China. So we do transport a lot of iron ore and metallurgical coal to China, not necessarily from the US. And, China is still the biggest exporter of finished steel products. Maybe not in the United States because there are the tariffs and all that. And the US is reliant on other countries like Japan, like South Korea, like these places. But, the rest of the world relies its infrastructure needs, whether you build a house or whatever, on China, in China. So it's like a given. You need China to produce steel. 56%. It's like you can't live without it.
Well, our politicians won't allow Japanese steel company to buy U.S. steel.
Yeah, and I want to get your thoughts on that, because that's clearly opens up the political conversation here in the U.S. But what's your take on that? Because that's clearly a disruption to the price of steel.
It helps China.
I cannot stress out the importance of having steel production facilities. I cannot stress out the importance because steel is irreplaceable. You can argue about, oil and the day after tomorrow, whether that's going to be replaced by, natural gas or, all these other, everything. Yeah. So, oil, certainly you can argue that could be replaced in the future or demand can soften for the various other reasons. But still, how can you replace that? I mean, you cannot build skyscrapers or roads or tunnels or without this thing. It's like irreplaceable. And once the world has developed this reliance on Chinese steel, how do you steer away from that? It's critical. It's a critical commodity. It's strategically
it is a critical commodity. But let's
important.
talk about the commodities, where they come from. In the United States, we have Westmoreland Coal. They're a very large producer of metallurgical coal, which is different than blast furnace coal, because Americans just think all this energy and steel just freaking happens. They have no idea how it gets there. But talk about some of the places you come from, and then secondarily, the other issue would be, tell us about that first. Another one I want to talk about is how you transport. In other words, we're seeing now more tankers and other companies going to meet these new environmental regulations on the maritime sea. So let's take the first one, which is where does this stuff really come from? And then secondarily, how are you dealing with the new regulations of environmental relations? Because I know Todd is a big fan of environmental regulations.
Well, there's this old saying that says, God must have been a ship owner. Because he has placed, the countries in demand of raw materials and products far away from the production areas. It's as simple as that. I mean, very, very briefly, steel in the form of iron ore comes out of Australia, Brazil, and South Africa in its largest form. It goes into China where it turns into steel. I mean, imagine the thousands of miles, that the product is going from the mine to the country, which is to China, and then they turn it into steel, and that's exported back to the countries like Europe or Africa, so it's a huge line of kilometers, miles, whatever you want to call it, that you have to transport it in order to make it like a finished product. So it's unfortunate, but that's the way the world is, and imagine that it leaves Brazil in the form of a mine somewhere in the middle of the country. It gets loaded on ships in the north of Brazil. That's been in the so-called VLOCs, and it's transported into China, where they make it into steel, and then they export it to Europe or whatever else. It's the distances are just
and do you
tremendous.
Do you also carry your raw steel, et cetera? Is that another part of or are you just in the commodities?
We do not. We only transport the raw material required. That gets into smaller ships called Supramaxes, Ultramaxes, or Panamaxes, and they transport that as a steel plate or steel rods and these kind of things. But we do the raw material.
I was going to say, I can't imagine a 200-yard boat carrying 85 billion tons of steel. That would be a hard sail to get any sailors to be on your help you out there. Although you'll do very well in a big storm. Yeah, in a big storm, the boat would just go like this.
Oh my goodness, that's so funny.
For sure.
Absolutely.
But to answer your question about the new environmental regulations, which is, I don't think that the lobbyists or the governments have thought through about the transition into cleaner ships, because even if the capacity was out there in the shipyards to build more efficient ships, the technology does not exist. There's still a big question mark as to what the future prevailing technology is going to look like. Right now, we're relying on, fuel, which has been around for like 100 years to move the ship from point A to point B. Right now, there is a dual fuel idea, which is that you switch from fuel into natural gas, but that's still very expensive and it's not economically justifiable. And then you're trying to build more efficient fuels, and they talk about ammonia, they talk about hydrogen. They talk about all these crazy ideas, methanol, green methanol. I mean, the amount of energy you need to create, green methanol, you need more energy to produce green methanol. So it doesn't really make any sense. What we have decided to do as a company is to make our ships more economical by investing on existing technologies. We invest a lot of money on our ships by applying these new silicone paints that make the ships even sometimes 20% more efficient, with all these other energy-saving devices, the so-called ESDs. And you can make existing ships be far more economical. You don't have to recreate the wheel. You don't need to. You have like 13,000 dry bulk vessels out there. It's impossible to replace all of them in the next 7 years. It's kind of, it's crazy just to think about it.
You know, I have a client who has created a technology that allows hydrogen to be put into canisters, and the canisters are replaceable, so you don't have to. You know, you can have 100 of the canisters, and numerous shipping companies have had interest in it, but it's the chicken and the egg. We have a thing in the United States that we're working. I have a very good client in the carbon capture business that actually takes carbon out of a power plant. But the big joke in carbon capture, and Bill Gates talked about this recently, it puts more CO2 into the air to do the carbon capture the way they're doing it. How does that make any sense? To your point, I mean,
we have examined we have examined a lot of cargo capturing technology, and it's a zero-sum game. Like you very well said it. I mean, it doesn't make any sense. You capture the carbon, and then you have to dispose of it. So it's kind of difficult. It's liquefied. You have water. So it's so expensive and time-consuming to dispose of the carbon that you capture, and you just need to go a bit slower.
Right.
If you look at the speed and consumption curve on board of the ships, it's not linear. So if you go slower by like 1 knot, your consumption goes down by 20%. So it's like, you know, it makes perfect sense to just go a little bit slower. So the emissions are far more friendly to the environment.
No question.
You don't need to invest all these billions.
By the way, Todd, I've never heard a ship president use the word linear correctly, so I'm very impressed by him.
Very impressive, actually. There's so much to say. And that's one thing we want to talk about is you just brought up operating costs. I would love to really put our investment banking hats on and really dig into that but in the next block. But we're going to talk all about it because with us, we have Stamatis Tsantanis. He is the CEO and chairman of Seanergy Maritime and United Maritime. Both companies are publicly traded. You'll see the symbols at the bottom of your screen as well as also in the description. But we'll get into all that also. So we'll be right back after the break. Please stay with us.
Buy, hold, sell, brought to you by CrossCheck Management.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
Welcome back to Buy, Hold, Sell. Well, with us today, we're talking all about bulk shippers, and we have a chairman and CEO with us today as our featured guest. Stamatis Tsantanis. He is the chairman and CEO of two companies. One is United Maritime, and the other one is Seanergy Maritime. Both are publicly traded. And when we left off in the last block, we were really getting into a little bit on the operating costs. But I got to ask you, Stamatis, when in Baltimore, I know that is that's an area I believe you're moving coal out of the ports of Baltimore. When the Key Bridge collapsed and all of the tankers, they were just sitting there idle. What was that like? I mean, are you still able to charge your customers then at that point?
The answer is that we always charge our customers because our ships operate on the so-called time charter agreements.
Yes.
So, we get paid by the month, whether we perform the service or we don't, unless it's our fault. So if it's any other fault like this one, so we still get paid, to put it this way.
You know how they learned that lesson, Todd?
It was in a very
yeah, the hard way.
Sorry? Yes.
Before the time charter concept, made it around the world.
Yeah.
It's their fault. It didn't get there. You used to have like time conditions to say you have to get here in so many days or you get penalized.
Yes.
But it was because of a variety of reasons I don't need to get it all into. But
so what? How long were the ships? How long were the ships sitting out there? I mean, you're in the Chesapeake Bay. I mean, how long before you get into Baltimore?
We were fortunate not to have ships in the area. We had some of our clients diverted our ships to different directions.
Yeah.
There's another source of cargo, which is in Seven Islands, Canada. So instead of going to Baltimore, we moved there, or they moved us to Ecuador. So, you can still source, in this part of the world, you can still source quality coal to transport to the places that it's required, like India, for example. I mean, the US is exporting a lot of coal from Baltimore area to west coast of India, and that's very critical for their energy needs.
If you didn't pick up on it, Todd's from Baltimore. I don't know why. Anyway, so what we really care about is tell us the growth strategy. How do we and the dividend now looks like it's like 11%, which is great. We happen to be converting many of our technology stocks into high dividend paying companies for sort of the obvious reasons. But you have price elevation, you have limited supply. No one, Japan can't buy U.S. steel. So, you're going to have to, your business is going to be just fine. What's the growth strategy? How do we grow the value of the company? How do we grow the dividend?
That's an excellent question, and thank you, Tobin, for asking that. We grew the company very aggressively from 2020 until 2022 and 23. Right now, we're in a very good spot, so we can still grow, but we can use internal funding. We don't need to raise equity for that. So for us right now, the top priority is capital allocation between growth and returning capital to our shareholders. We have some excellent fleet that is going to be around for the next 5-7 years, and we believe that the cash flow, as you very well said, for the next 3 years at least, unless there is like any surprise of supply, it will remain to be very strong. So, with strong cash flows, the ships operating in very good conditions, and we provide some excellent service to our clients, I believe that the cash flow will be strong, and that we hope it's going to be returned in its biggest part to our shareholders. That's why we are increasing the dividend quarter after quarter. So Q1, we had the small dividend, smaller than what it is right now. It's still significant. Q2, bigger dividend. Q3, I don't want to show any promises, but it looks quite good. So right now, our intention is to distribute a big part of our cash flow to our shareholders, and at the same time maintain some capital for fleet renewal and a very moderate fleet growth. Right now, for us, the optimization and maximization of return on a per share basis is top priority, and that's what we're doing. That's why you're seeing the stock, moving upwards, because uncertainty of cash flows is away. People tend to realize that the next 3 years at least will be strong for our business, and our intention is kind of evident that we will be returning capital to our shareholders.
Well,
to make them
let's talk debt service. We also have interest rates coming down significantly. Where are you? Do you have variable? You have fixed rate? Do you have stuff you can refinance at lower rates? Because that, money, that lower interest payments goes into dividends too. It's not just the cash. So tell us about your debt and do you have any opportunity to refinance at lower rates?
First of all, we have a very steep debt repayment schedule. So 2024 and 2023 was quite steep, and the cash flow is still very strong after debt repayment. Our finance department and our CFO has been extremely successful in refinancing whatever debt becomes due with much cheaper rates, not only in respect of the actual interest rates becoming lower, but also the spreads. We are reducing our spreads. So recently we have refinanced debt by reducing the spread by more than 125 basis points. So it's quite significant. Most importantly, our debt, our leverage has reduced from about 95% in 2020 to about 40%. We're at about 40% right now, and it keeps reducing. So our intention is not to be a net debt zero, but to continue paying our debt and to have a very prudent capital structure and to use the debt in the most important fashion. So we have managed to create this massive cash flow for our shareholders, while at the same time we have been paying back a lot of debt to our lenders.
Yeah, Todd, the reason why he has dark hair and not gray hair is he's taken his debt service down from 95% down to 40%.
Yeah,
absolutely.
It's getting gray. It's getting gray. So.
Well, join the club, okay? You got a little longer way to go. Of course, I'm a Scotch-Irish person. There are no dark hairs after 60 years old. All right, then the final part is you waive your debts now, and you're on. When you say the spread, you're saying there's the cost, the spread between your debt service and the
the margin. It's a margin.
The margin, yeah.
Yes. The margin, yes.
Yeah.
Yes.
Well, that's that is very cool. All right, now let's talk acquisitions. You got two public companies. You're obviously smarter than like every other ship owner company I've ever talked to.
Thank you.
Again, linear, really? I think that's like a Lear jet. Oh yeah, it's linear. I have a linear jet. So, what about some acquisitions? Are there any opportunities you're saying?
Acquisitions are always a concern because it's very difficult to source high quality vessels. We shop our ships from Japanese owners that we have this amazing understanding and agreement. So we tend to do business with a lot of high quality Japanese owners, and we have been able to source most of our vessels from Japanese, and most of them are built in Japan, which implies a higher quality. Now, the opportunities are not there as they used to be, but this year we have managed to buy 3 ships. I mean, 2 already and 1 more coming up. So 3 ships over a fleet of 20 is okay for now. And I believe that if we continue to be serious buyers, and like we have been, we'll continue to source some vessels. But we do not intend to grow aggressively, and we do not intend to start placing crazy new building orders. We're not like that. We will leave with the existing ships, maybe a few more for the next few years that we think we're going to be working them to their maximum capacity and generating strong cash flow. So yes, we can source ships and we can use them very efficiently.
Yeah, what's interesting in your business right now is that everybody's making stupid money. So nobody wants to sell you their ships because they are leased out, which I guess final question. What's the typical lease rate that you have with Trafigura or with Val or other place? Is it 6 months, 1 year, or is it trip by trip?
That's an excellent question. We have this hybrid approach, and it's very creative, that we hire the ships to our clients on a time charter basis, but we make the index. So we get the spot rate while we charter the ships for a period of time. We believe that the spot rate is still undervalued, but at the same time, we have this embedded agreement in our contracts that we can convert on our own request from floating to fixed for a future period of time. And we have used it very, very efficiently in the last few years. And that's why we have been able to overperform the indices. Because when we feel that there's a disconnect, between the forward rates and the current rate, we tend to lock it in, and usually it works in a very profitable way. And that's why we have been overperforming the index. So to answer your question, it's floating rate mostly, that we have the ability to convert it into fixed, but the period is a time charter. So it's not like, okay, we take it as it goes. And I believe that has worked out very, very well. We are among the top performers from our universe of companies, public companies out there.
Okay.
I've never heard that. I've never heard that before for a shipping company. Yeah, that's very cool. Of course, if the CFO blows it, you got to take a little money out of his pocket. Man, come on. I would not want to have to make that call. We're going to flip over from spot rate means what you could get today. That is today's rate. But yeah, that's very cool. Well, it's a pleasure to meet you. As a shipping nut, we will look at putting you on our portfolio list.
Absolutely.
Thank you very much. Sure. It's a great pleasure, and it was amazing to meet you.
Same.
Absolutely. Stamatis, we would love to have you back. We'd love to hear more about the companies. I mean, you have so much success and there's so much to look forward to. We didn't even talk about supply chain disruptions.
Oh my God,
that conversation for another time.
Of course.
But again, for everyone out there, check out the both companies. They're both trade on the Nasdaq. Symbol for Seanergy Maritime is SHIP, and for United Maritime, it's UC. It's USEA. Definitely want to check it out. But you can obviously see on the bottom graphic here of the for both symbols. So so Stamatis, thank you so much again for joining us on Buy, Hold, Sell, and we wish you a wonderful time in the United States
And the U.S. Open.
And the
I
U.S.
wish I
Open.
could go tonight, but tonight I'm flying back, unfortunately, back to Greece. So, you know, I'm going to miss a big game tonight.
Ah, there you go.
Yeah, but you saw a great match.
Oh, yeah. Two great matches. Yeah.
Absolutely. So on behalf of Stamatis Tsantanis and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. Next week, we have Victoria Fernandez. She is joining us again and coming back from Crossmark Capital. We can't wait to talk to her about the market. So again, thank you again, once again, for joining us, and have a great weekend. Take care.
Sure.
Thank you.
Buy, Hold, Sell, brought to you by CrossCheck Management.